The Bank of Japan might be the single most watched central bank in Forex markets right now. And if you trade any yen pair, understanding what the BOJ does and why it moves the yen is not optional. It is essential. Here is the core idea. When a central bank raises interest rates, its currency tends to strengthen. Foreign investors move capital toward higher yields. When a central bank keeps rates very low, the currency tends to weaken. The BOJ held rates at or below zero for an extended period, longer than almost any other major central bank in history. That decision shaped everything about how the yen behaves. For most of the past 3 decades, Japan struggled with low growth and low inflation following a severe economic slowdown in the early 1990s. The BOJ responded with what became an extraordinary toolkit: deep rate cuts, large-scale bond purchases known as quantitative easing, and a policy unique to the BOJ called yield curve control, where it targets specific interest rates along the bond yield curve to keep borrowing costs anchored. These ultra-loose conditions turned the yen into the world's most popular funding currency for carry trades. Carry trading means borrowing in a low-rate currency, like the yen, and investing that money in higher-yielding assets elsewhere. Trillions of dollars worth of these trades built up over the years. That matters because when sentiment shifts, those trades unwind fast, and the yen can surge sharply with very little warning. The BOJ meets roughly 8 times a year. In the lead-up to each meeting, traders watch Japanese inflation data, wage growth, and GDP closely. If that data suggests the BOJ might tighten policy, the yen often starts moving before any official announcement. After the decision, the governor's press conference can be just as important as the decision itself. A single change in phrasing can trigger major yen volatility, which means trading around these events carries real risk. Prices can move quickly in both directions. The yen also carries a separate identity as a safe haven currency. During periods of global stress or risk aversion, investors tend to buy yen. Japan is a large net creditor nation, and during crises, Japanese investors often bring capital home, driving yen demand. That safe haven dynamic can override the BOJ policy direction in the short term. Traders who ignore it can find themselves on the wrong side of a sharp move. To build BOJ awareness into your routine, mark meeting dates on your economic calendar. Track Japanese inflation and wage data. Watch statements from BOJ board members between meetings, and compare Japan's rate stance against other major central banks. Because it is that interest rate differential that drives long-term yen trends. If you want to practice trading yen pairs around these events, a demo account is a low-pressure way to start. You can test your reactions to BOJ announcements without putting real capital at risk, which, given how fast these markets can move, is exactly the right place to begin.